Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was scrolling through some articles. I see that the Dow futures sink nearly 500 points as Putin orders deployment of troops to eastern Ukraine. I'm reading this February 21st at 7:40 p.m. Mountain Time. Just to give you some perspective, I don't invest based off of market news. I don't invest based off of events like this. If this were to impact anything in our stocks, I'm sure it may impact perhaps maybe uranium. Uranium's been pretty tied to the overall markets. Um, if the overall markets drop like we're going to see, we're probably going to see some of these investments drop. I view it as a buying opportunity when they slow down this move and start to turn and move on up. I'll buy into that strength for sure. So I'll be a buyer of anything that's falling because of news in the short term because of this. The overall structural market conditions underneath, that's the expansionary phase of real estate in America, the structural market deficits in oil, uranium, and all of these other metals that we're seeing related to, electric vehicles, renewables, and all these other sorts of commodities that are going to be needed in the future that are in short supply. Those structural deficits are going to be there no matter what. So I view this as a buying opportunity if the overall markets drag down some of the companies that we like. Uranium's had a pretty good pullback. We are, I think, below 50% pullback on some of the companies. If they fall further to the downside, I would be a buyer. That's me. Would I buy it right after tomorrow? I'd have to see the charts, guys. I'm going to have to watch this and see how it plays out. But I am a buyer because this is market news, and I think it will eventually pass. We'll see. But I'm a holder. I'm not selling anything. But right now, the Dow futures are down 500 points. It says U.S. stock index futures were headed sharply lower Monday evening as Russian President Vladimir Putin ordered the deployment of troops to separatist areas within Ukraine. And a lot of the times I was looking at some articles with how war reacts to a lot of stuff. And in all honesty, guys, this is, I think, noise in the system. That's what it's eventually going to be, is noise. But wherever the market is weak, it's going to amplify the move. Stocks have been pretty weak. Looks like they're getting toppy. They're rolling on over. They could get hit pretty hard. And when I mean stocks, I'm talking about NASDAQ and the S&P 500. Now, this will, in a market liquidation event where they really start to sell things, it will impact a lot of the stocks across the board. Usually during war, commodities do quite well. And I would think that all it's going to do is amplify the moves. So oil will probably go up. They also have great exposure, Russia does, to the palladium market and platinum market. So I would suspect that those would go up, and gold will probably go up as well. So those are the markets that will probably do quite well with this type of news. But I don't trade news. What I use the news for, and hopefully this is the case, I use it as a buying opportunity when it comes back down. And I probably won't buy tomorrow, but I'll have money. I'll be making money. I'll have it come in, and I'm going to be looking for uranium, especially, to be brought down with this news that I can cost average in and continue to buy more. So that's the way that I'm playing this. I don't know how long it's going to take for this to work its way out. I don't know if anyone really knows that. But we'll see it in the charts. We'll see when buyers step in. We can see it in the charts. And check out my daily updates when you see those. I go over oil, uranium, and precious metals. And I don't go over all the companies. I go over a good chunk of them. And you can apply that to any of the companies that you guys like in the sectors. So, again, structural market conditions underneath are going to be robust. We're just waiting for news and the fear in the markets to dissipate. We'll probably see the 10-year yield drop. It's going to be very good for precious metals because you're going to have high inflation with lowering interest rates. People are probably going to run to bonds. They may run to the dollar, and that might spike a little bit. But so that's kind of the safety factor in the nerves and jitters in the market. Again, I would look for commodity type companies, especially uranium is the one I'm looking at. Maybe fertilizers, uranium, copper, nickel, those types of companies. If they come and they crash and they kind of come back, I'd be a buyer when I see them start to turn. So that's the way that I'm playing it. Just wanted to kind of give you a quick little video clip on it. Don't be afraid. Again, the structural conditions that are underneath this are going to force everything higher. And if just hypothetically, if the real estate market were to get pummeled, right? That people say that the real estate market isn't as strong. We went through the medical event in 2020, and house prices went up. They were going up, and the trend was in place from 2011, 2012, and they've been going up and up and up and up. Platinum and gold and precious metals, the trend is starting to move to the upside. The structural underlying market fundamentals are supporting higher commodity prices overall. Real estate prices, commodity prices, and precious metals prices in general. If anything happens in those areas, I view it as buy the dip, hold the rips as we go into a long-term secular bull market in commodities with higher inflation rates and higher interest rates. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.